We have the Taiwanese index, which is lower by 112 points.
The Fed staff still forecasting a mild recession in the second half.
On the way down, 44,600 perhaps is the level that could be used as a bit of a stop.
Maybe in the last month or so, markets have actually appreciated quite substantially.
Well, for Marico, it was a quarter which was marred by a fair amount of one-offs, as a result of which the company's volumes suffered.
Hindustan Zinc, late last night, they've said that they're going to be considering interim dividend on July 8th.
The first stick on the Nifty is in the red.
I would want to wait and see what happens in the US market, because that's going to determine how the Indian markets behave.
Our order book right now is around 30,500 and odd.
So Tata Power is in focus. That is because they've received an order worth 1744 crores.
Mumbai, in the half yearly, we have seen more than 40,000 apartments sold.
The Nifty and the sensex have scaled yet another record high.
The share of large caps in the total market capitalization has gone down.
Mid caps really are stealing the show, 0.8% higher on the mid cap side.
Good afternoon. That was the day so far. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbhi Upadhyay and Nigel D'Souza. And guys, we got in the whisker of the 19,500 mark. In the last 10 minutes, the Nifty's gone to levels of 19,490. After that, it scaled back about 20-odd points, but you can see the weekly options expiry volatility play out perhaps in the last few minutes, and it could happen in the next 1 hour as well. Currently, as we speak, it's so far been a steady day of trade. Pull up the intraday chart. For the longest time, the Nifty was hovering around 19,450. It's just in the last 10 minutes, it made a dash towards 19,490, and from there, it's retreated a tad bit. The action is in the broader markets. Look at the mid-cap index surge. The mid-cap index is up close to about 0.8%. The small-cap index is giving it company, and markets are now higher for the 8th consecutive day. Every day we've been saying perhaps this market is going to pause, take its breath, consolidate all the gains that it's seen, but it continues to climb higher and higher in the face of weak global cues. Asian markets today were decisively down 1 to 3%. Hang Seng was the market which was down 3%. Europe right now at the current rates is down anywhere between 1 to 1.5%. So global markets are under pressure, yet the Indian markets continue to march higher. And today it's the leadership has been provided by Reliance Industries. Reliance Industries is currently up close to about 2-odd%. Pull up that contribution plate of Reliance Industries, and you would see that if the Nifty is up about 75-odd points, about half of it is courtesy Reliance Industries. But apart from that, there are quite a few stocks which are making a dash higher, and they are in the auto pack. The intraday chart of Tata Motors, a Hero MotoCorp, a Bajaj Auto, even M&M. For the last few days, we've been talking about Eicher, Hero and Bajaj, but today it's the turn of M&M, which is, I think it's the top Nifty gainer right now. M&M is currently up close to about 4.6%. So that's the pocket which is now powering for the markets, the auto pack.
Well, that's right. This afternoon, in fact, we're going to see the expiry play out the next 60 minutes, and the 19,450 call as well as put are very, very active. Okay. So if you look at the 19,450 put, the premium's around 20 rupees. So on the downside, 19,430, 19,425 becomes important because there will be some writing being seen at that level, which has come down now to around 12 rupees. So on the lower level, you're counting on 19,430 holding out. Okay. Now on the upside, the 19,450 call is very, very active, and just take a look at this. Till around 10 minutes ago, though the Nifty is up close to around 65, 70 points odd, we didn't have any movement in terms of the premium out there. Now that premium is moving. So if you're looking at those writers, those call writers, for bulk of the day, the premium was around 30, 35 rupees odd. So they are counting on the 19,480, 19,485 odd level holding out. And as you said, we just went to that mark and we quickly did a U-turn out there. So we need to keep an eye out on that mark. If we can get past this 19,480, 19,500 odd level, we could quickly see another 50, 60 points as well, given that there is expiry related factor that plays out. And given that the Nifty Bank as well, that yesterday saw some call writing, that as well is scaling up to the high point of the day. So we're in for a very, very exciting final 60 minutes.
So we could make a dash towards 19,500.
Indeed. And maybe if we hold above those levels, then maybe we could do a quick 40, 50 points as well. Surbhi?
I just get that sense. I'm going to go back to your party analogy, Nigel, that, is that time in the party where you're beginning to sweat a little bit. At least someone like me definitely heads and gets a glass of water because things are getting really, really hot out there. So I guess it's kind of, getting on the edge now.
But no one's leaving this party just
You
yet.
can't leave a party until the music is raging, until the time, the food and drink is flowing. You don't want to ever leave a good party, but you've got to get cautious. And I think that's the stage the market seems to be entering in. I'll just give an example in terms of, the mid-cap action. The other facet is that till earlier this week, we were complaining that mid-caps have taken a backseat and, the cooling off. Look at the mid-cap index today. I mean, it's leadership and how that index is steady. And individual names, obviously, is where the action is. Look at a stock like CEAT. It's flying away 16-17%. Some of the other tire stocks, even JK Tire, for that matter, is up 6-7%. There's some green on an MRF, on an Apollo. But CEAT is absolutely breathtaking. You can argue that it's a rub-off from the auto rally that we've seen. Autos have had a huge run, and some of the tire manufacturers are moving higher now. But there are other names. Look at Electra Green Tech. Again, it's on the move. It's one of the best performing stocks in the mid-cap, small-cap category this year. 5.5% up today. There's a massive real estate party that's been going on. Suntech Realty, even the smaller names, tier 2, tier 3. It's not just about a DLF or a macro tech. Even the smaller stocks within sectors are now finding buyers. So, Nigel, what to say? I mean, it's a hot market. There's no denying that. The Fed and the interest rate issues and all of those issues aside, there's a party out here. And like Rima said, now who's going to bet against a great party?
And logic would say that you have to pause. But with these sort of inflows and this kind of market move, you don't even want to miss any part of the party, because if you get off, maybe you got off too early. When we broke 19,000.
And you may not be able to get back in.
Yeah, when we broke 19,000, you would have thought we had done 19,100, 200, 300. And in last, a week or so, we have moved close to around 500 points or even more than that. So that's telling you the kind of ferocity. And just one more stock, since we'll be talking about some of the mid-cap and small-cap names. Switzerland was under pressure yesterday. Today as well, it was down close to 5%. In the last 90 minutes or so, suddenly that stock has moved up. And remember, this is a stock that, is sharply off from the recent top, from the top that we saw a few years ago or so. It's seen a big rally. You've got a bit of a dip, and it's got latched onto almost at around 18 rupees as well as we speak. How do you trade the index, though? Mitesh Thakkar joins us to help us out with exactly that. Mitesh, this market, just take a look at it. Last 30 minutes or so, just when you thought you're going to be taking it easy towards this expiry, weekly expiry, the bulls seem to suggest we want to go past that 19,500 odd mark. How are you reading it?
So, Nigel, I think, the market momentum remains very strong. We had earlier suggested to trail the stop loss about 19,200 and buy 19,250, 300 as the fresh buying zone. We didn't even test those levels. So just keep trailing your stop losses. Now I think it'll be at about 19,335. And once we get past 19,500, I think good chance that we are looking at 19,650. So see, at all-time highs, there are no new targets. So what we keep doing is that we keep measuring the intraday moves and then add the retracement factor on the upside in the reverse to try and come out with working targets. So we'll keep 19,650 as the sum of the target area. And for the time being, 19,340, 335 becomes the support zone. So stop loss can be, or trailing stop loss can be placed below that. On the stock side, I have a buy on Power Grid, making a fresh swing high. So buy here with a stop at 255 for targets of 270. And Pidilite is a buy as well with a stop at about 26.15. Look for targets of 2700.
Okay, Mitesh, we'll come back to you as the hour progresses. For now, let's talk about the oil marketing companies. They surge in trade after many brokerages have a positive view on the sector. Sonal joins in for more. Sonal.
Well, all marketing companies, they're in focus because of the improvement that they've seen in their fundamentals as well. And that's what brokerages are bullish on. Expect Q1 to be a very strong one across the space. Jeffrey says that OMC should benefit from supernormal margins in the marketing segment, which will offset any weakness that they're seeing in the refining segment. HPCL should be able to do better here because they have a higher exposure to the marketing segment, around 54% of EBITDA from there versus IOCL and BPCL. Kotak says that OMC's auto fuel recovery, they actually increased to nearly 250 to 250 billion rupees. That is in the first quarter of FY24, and they expect OMCs to report strong numbers as well. ICICI Securities says that EBITDA and PAT for all the three companies will see an improvement both on a sequential and on a YY basis. And IIFL is of the view that FY24 could be a record year for OMCs. They will be benefited by importing of the Russian crude in the overall product basket. And if the benefits actually come in, they will see a benefit of around $2 to $3 per barrel. Right now, India's crude basket has 25% of the crude coming in from Russia itself, and the landed cost here is $9 to $10 per barrel lower than the Brent crude pricing. So it definitely will impact their, or at least benefit their refining and marketing margins. This is what the street is bullish about.
Okay, all right. Got that, Sonal. Thanks very much. So it seems like a Goldilocks scenario. I mean, all kind of perfect things adding together. Remember, you heard it here on CNBC-TV18. Sapna told us that the government is also looking at the possibility of more equity infusion in these oil refining companies. You have the possibility of higher GRMs, as Sonal explained. And then those marketing margins, over recoveries. You know, we spent the better part of our career tracking under recoveries for these companies. But now we live in times of over recoveries. Deven Choksi is our guest on the show this afternoon. Deven, good afternoon. Great to have you on as usual. Real sweet spot, right? These oil marketing companies. And I was looking at the stocks. The stocks have also rallied. For instance, if we check out IOC, then it's up about 7.5% this month. It's up 30% this year, calendar year itself. So how would you play it? Is a lot of this optimism already in the price, Deven, or would you still be a buyer at current levels?
Surabhi, I think this is, more of a cyclical business as I see it. I think because come elections and thereafter the companies will not be able to change the market prices, and that is where probably in a situation if the crude oil prices goes up, then they will suffer. If the crude oil prices remain at the current level, then I think they are better off at the current prices. So I would think that this becomes very cyclical and an unpredictable kind of a activity. I think that one would like to possibly put a bet on. But of course, I think few things going positive for the oil marketing company, refining companies, government owned. The government is pumping in money in order to basically, build the green fuel or the supporting, the green initiative that this company would require. So I think for creating the capacities in the area of hydrogen, creating the capacities in the area of solar, I think these companies are being now given the money by the government. So from that point of view, yes, I think they will have relatively better things to talk about going forward. But I think, as I said, current business environment, I think they are benefited. But whether this is going to be a lasting thing, I do not know.
Okay, Deven, do stay on. We want to get your views in on Marico. But first, let's give our viewers and get them up to speed. The week business update shared by Marico this morning. They are talking about a slight decline in revenues this quarter, though the bottom line is going to look good on account of margin expansion. Mangalam joins in with more on that. Mangalam.
Well, that's correct. So Marico reported a weakest set of first quarter update this time around, and the company said that the primary volume growth this time around was marked by one-time internal and external factors. In fact, the anticipated pickup in rural demand also remained elusive, and as a result of which the company saw low single-digit volume growth in this quarter. And remember, there have been a lot of price offs over the last 1 year. The company's been passing them to consumers. So despite low single-digit volume growth, the consolidated revenue for the company in the quarter declined by low single digits as well. So volumes have grown, revenues have declined because prices have been cut. However, there are a couple of silver linings here. One, margins have expanded. So the expansion in operating margin will drive double-digit growth in the company's bottom line. That's a big positive. And secondly, because the first quarter was marked by some internal one-offs, the company actually sees a visible pickup in the coming quarter as well. But up until now, we've got strong updates coming in from other companies and strong updates expected from other companies as well. So maybe the street will give Marico one more quarter when the visible demand picks up.
Thanks a lot for that, Mangalam. Deven, what's your view on the stock? Mangalam saying maybe the street will give it one more quarter before demand picks up. But today the stock is down close to 2%. How do you read that quarterly update?
So I think comparing with the other FMCG stocks, I think you have got far better visibility in the business, even in the personal care business of HUL for that matter. I would think that out there, one good comforting factor is that the cost of raw material is under control. On the other side, the rural demand is already increasing. So certainly, I think the business condition is favorable for most of the FMCG companies in the personal care segment. I think the causes for Marico's disappointing performance in the last quarter on the volume front is already known. But whether I think they would overcome in the subsequent quarters or not, I'm not completely sure. Both Marico and Dabur, I think to a certain extent, have been facing a similar kind of a problem of not finding enough amount of volume growth. Whereas I think the likes of HUL could probably, I think, find it far better. Maybe I think the arrangement to basically use the AI in generating the predictive sales and probably catering to that market demand, I think is working well for likes of HUL vis-a-vis the others. That could be the one summarization from my side on this front. But otherwise, I'm not too sure where exactly I think one would place Marico at this point of time.
Deven, I also wanted your view on the stock exchanges. NSE is in the unlisted market, it's available at around 3,100, 3,150 depending on the lot size. And it's available at around 20 times its earnings. But, you can't really go ahead and buy it unless you want to buy a big quantum. I mean, it'll be a minimum ticket size of 30, 40 lakhs or even more than that. From a listed perspective, BSE is the stock that's recovered a goodish bit from the recent lows. Now, in the last 1 hour or so, they've announced on the exchanges that they're going to be doing a small buyback, I think close to around 375 crores, at a price of around 816 rupees per share. What's the view on the stock? They have cash in their books. They've sold the shares in CDSL as well and raised some more money as well. Do you think business prospects finally will pick up? And would you bet on the stock closer to around 700 rupees?
So I think the exchange stocks are definitely the stocks where you are basically generating cash on every single day. I think with every transaction that you produce, you are generating cash. And that's the beauty part of this particular business, that I think business is also very predictable because of the cash generation. So certainly, I think some of the investors, I think, who are basically looking at, I think, investing into annuity kind of a business, they find exchange business, I think, more preferable into their portfolio. Having said that, between BSE and NSE, I think BSE's balance sheet remains, I think, extremely cash rich, and I think they remain extremely cash surplus. So where they are distributing their money by way of buyback, I think every year, I think this has been a phenomenon. Though a small quantum of money, but it is still getting bought into. The shares are still getting bought into. In my viewpoint, I think between NSE and BSE, BSE certainly is catching up now. Maybe I think their derivative markets have started functioning relatively better compared to what it used to be in last couple of months. If it sustains and if it starts scoring relatively better with, I think, differentiated product, I must say differentiated product, if those products are allowed to be operated, then they hold really, really good chance to get the things going for them. They are probably, I think, best as far as the technology is concerned. And maybe I think they deserve that. I think if the product differentiation comes, they would probably get relatively better market share than what they're currently commanding.
All right, Deven, thanks for that. And stay with us, Deven. But, before we take that short break, the markets are indicating maybe we could have a bazooka move in the last, 40 minutes that are left, 40, 45 minutes odd. The auto index has moved to the high point of the day. The Nifty as well is on its way to around 19,500. The problem today is that those that would have shorted the market or written calls, now they're in trouble. Auto index has moved up. You pull up a couple of more names. Tech Mahindra as well has moved to the high point of the day. And Kotak Mahindra Bank. Just pull up a couple of these names because they have moved, quite well in the last 30, 40 minutes or so. Kotak Mahindra Bank from the banking pack as well is looking good. And that one has spiked up to the high point of the day. Slip into a short break. On the other side, we'll continue our chat with Deven Chauksi. Pashupati Advani of Global Foray as well will be joining in to give us his view on the markets.
Welcome back. You're with us on Closing Bell. Well, Tata Power is one stock that has been in focus. It's not the only company, but it's definitely one more company that is looking at these smart meters in a big, big way. They also bagged a smart metering project. Remember, just earlier this week, we were talking about a smaller company, a mid-cap stock, where the potential of smart meters sent that one soaring higher. Let's get in Surabhi to understand what Tata Power's project is all about. Surabhi, do give us the details.
Thanks so much for that. So that's right, Tata Power is on our radar, and that is because the company has received an order worth 1744 crores to implement smart metering project in Chhattisgarh. Now, this is the third company in the last 3 days that has received a smart metering project order. Now, Tata Power will install and maintain 18.6 lakh meters in Chhattisgarh. So the cost per meter comes down to 9,376 per meter approximately, and this is in line with what Genus Power had also told us earlier, that their cost per meter will come about to 10,000 rupees per meter. Tata Power project will be spanned over the period of next 10 years, so we'll see how the execution works out for these smart meter projects, but for now Tata Power is surging in trade.
Oh, it absolutely is. Thanks very much, Surabhi, for getting us the details. Devin, I don't know, if you've tracked this space closely, Tata Power is, of course, today's news. Last 2 days, we've all been trying to understand how, Genus, how that stock gets impacted with this tie-up that they did with GIC worth $2 billion of investments. Just your thoughts on the power space and any of these stories that you may find value in?
I think more importantly, most of the companies, either in generation companies or a distribution business, or even in the ecosystem business, like what I think the Tata Power is being into in one of the division. I guess I think they are all finding good amount of traction because of the conversion which is happening. Today, I think the installation of the solar capacities which are also happening, and I think part of Tata Power unit itself, I think that would also demand the higher amount of business attention as far as I think the other ancillary activity goes, including the metering activity. So from that particular perspective, I think one is getting a good amount of traction the business is concerned. In fact, I am seeing this particular possibility of getting the higher orders in each and every segment in the ecosystem. Be it in the capital goods segments, I think business is connected with, I think, likes of ABB, Siemens, or Schneider for that matter, or even I think the companies like Larsen, Tata Power in the domestic space, I think in the domestic company space. They are all getting reasonably high size of orders because of the spending by the government on this particular front. We believe that I think the visibility is getting built with a higher amount of orders which are getting disbursed for this company. Of course, I think the results are going to be coming over next couple of years, but I think the business visibility is getting developed as far as the companies are concerned.
Devin, thank you very much for joining in. By the way, guys, we've scaled 19,500. The new all-time high on the markets is 19,502. We're just shy of that level as we speak. A near 100-point gain on the Nifty now, and 19,500 is here. Let's talk now about the insurance sector. The general insurance data for the month of June has come in, and we've got Yash joining in with the details. Yash.
Well, that's correct, Rima. So as far as the first 3 months are concerned, the numbers for the industry have been good, continues to be good for the current month, that is for the month of June as well. General insurance industry has grown its premium at 15% on a year-on-year basis. As I said, the first 3 months have been good. So far in the first quarter of FY24, the growth stands at 18%. For standalone health insurance industry, June premium has grown by 24% on a year-on-year basis. First quarter, the growth is 27%. Now let's speak about the listed companies. ICICI Lombard in the month of June has been the strongest performer. The premium has grown by 20% on a year-on-year basis. The first 3 months have been good, so the run rate goes strong as well. 19% growth for the first quarter, and the market share for FY24 so far is also up about 8 basis points. New India Assurance, after the first 2 good months in this financial year, this time around the numbers have been weak again. So June premium has grown just by about 5%. First quarter premium is up 9%. Market share so far in FY24 is down 138 basis points. Finally, Star Health Insurance, June premium growing at 19% on a year-on-year basis. First quarter premium is up by 20%. The market share till now in FY24 is up about 7 basis points.
Okay, all right. Thanks a lot for that, Yash, and thanks for being on top of that particular data point. Well, time to move on then. Pashupati Advani of Global Foray joins us on the show. Hi, Mr. Advani. Good afternoon. Thanks so much for speaking to us here on CNBC TV18. How do you read your market setup as of now? I'll tell you what, I was traveling from Lucknow to Mumbai a couple of weeks back. And the gentleman at the side of me happened to be a market watcher. And, we had a conversation. And towards the end of the conversation, when we were getting off, he, in fact, was giving me a couple of tips. So, I mean, that the fear is always when everyone is giving tips, everyone is talking about stocks. Do you think we're reaching that euphoric stage? Or do you think there is still plenty of juice left, particularly in the broader markets after the big underperformance?
So obviously what you're saying is cause for concern if everybody's giving tips. At least he was a passenger in the business class with you as opposed to the taxi driver taking to the next stop. But
so that's positive. Anyway. We view that positively.
So we're 3/4 of the way there, not 100% of the way there. But I will say one thing, that India is looking attractive compared to the rest of the world. So we are seeing some flows coming this way. And the last couple of months have been good. FIIs have been coming in. And also this new move of having the Nifty trade on Gift City, that's also a good thing, because I think that'll bring volumes onshore. The reality is that, there is still the Damocles sword hanging in US where things are not going, well. And I think that if something does happen, like any kind of a jhatka over there, then I think that we will have some hurt. But otherwise, I think we're just going to float along and money continues to come in. And so you might as well enjoy it. Like, be on the ghoda, but get ready to jump off the ghoda, is what I say.
Which is not easy.
It's not easy. And it gets tougher and tougher now that we're at all-time highs.
It's very similar to the Pashupati's analogy is very similar to mine. He's jumping off the ghoda. I was thinking of how to quickly dart out and, hit the exit route from the party.
You remember what Siddharth Bhamre told us on the show? Like, stay in the car, dance
close to the exit door. Yeah,
but Pashupati, the thing is that it's very hard to find, when is the right time to exit the market. Like, you realize that, I should have exited after the market has given you a 7, 8, 10% kind of fall. So what would be the warning signs, according to you?
No, so one way of doing it is by writing calls above the market and just taking little bites instead of trying to make a big bite out of the market. So smart money is actually doing that. I would not write puts into this market because if there is any kind of a pullback, it will just pull back and hurt you. So I would not be a put writer. But certainly I would look at, if Nifty's at 15,500, then, maybe writing calls at 16,000 or, things like that, you might be able to get some premium. So that's worth considering for the end of the month. So, I guess that's the way you have to play it. And again, one has to be stock specific, industry specific, and then and only then can you actually take little bits out of the market.
Mr. Advani, sorry to come in. Writing calls at what level? Sorry, we missed that.
No, above the market. So if the Nifty is 19.5, so maybe, at 20,000 or, just 19.7, higher than the market. So you take little bites and you have some of the upside. But I think
and if someone isn't a F&O player, right, not comfortable, writing calls and puts, then would you recommend some profit booking on your portfolio? And if yes, which sectors?
Obviously, I would say you definitely have to profit book simply because you've got profit. But the reality is that, you have to look at sectors that are still performing. So I think logistics is still performing. I think that, cement, I like pharma, even though it's been hammered. I don't like IT. So, you can do a combination of, buying some good cement stocks. And mid-cap cements are obviously trading a lot cheaper than large-cap cement. So that's probably the place to be. So like that, you can pick and you have to look at, good management, good quality of earnings, where their geographic distribution is, and then, take it from there. But again, India's always been a stock-specific market. And I think that's, definitely that's the way we need to be there, be in it.
So, Pashupati, if I were to ask you, I mean, we've had a phenomenal run the last 3 months. What is the biggest risk on the horizon, if you see one? Or is a melt up the actual risk that, suddenly we see this thing taking off? Look at the last 5 days. We've taken 5 sessions to cover 19,000 to 19,500. So is a melt up a real possibility? And then how do you deal with it?
I actually feel what is of concern to me is the rupee dollar, which seems to be continuing to get weaker. So anybody who's dependent on imports, I think those need to be worried about. So, I think, The OMCs are benefiting because they've not yet passed on the lower oil price to the consumer, and I think that's a good sector currently to be in. But it's for a short burst, and I think any company that's importing to export again, those are the ones to worry about, because I don't think they're going to get the margin in the exports, and the imports are going to cost more. So those are the things we need to be looking at. Trends like that. Surabhi?
All right. Yeah, Mr. Advani, it's always good when you get timing right. And you have got timing right on Paytm. It was done and dusted. No one was really looking at it. But I recall that you said you made some investments there. And you also made this point, if it pulls back a little, you look to get in. This is a couple of months or so ago. So what are you doing with that investment? Are you booking out and, having a good time with that money? Or do you believe there is still more upside out there? Because you had bought, I remember, and then you were saying you were also looking, I think, at Zomato. So did you happen to buy Zomato as well?
No, I didn't buy Zomato. I bought and sold Paytm because I had also told that Alibaba had sold their stake. And that was a big stake. But then since then, it's jumped about $100. I sold it in the low 700s. That's my loss. But I did get in right. And so I did make money. And I think that, so we move along. At this level, I've not yet looked at it again, but I will look at it again as a business model. But right now, the pain of being $100 off is keeping me away from actually doing research again. Nigel?
Yeah, Mr. Advani exited the party.
Well, that's exactly the point, right? If you book profits, like Rima was asking, you run the risk of watching those stocks head higher, 20-30%, because that's the kind of market we're in. So I guess this has to be sort of played with caution. But Pashupati, tell us, what else are you, reading about these days? What else do you have your eye on? Anything, any interesting themes, any interesting conversations? What's tickling the imagination?
So, I'm also right now having a look at Indus Towers, simply because I think that, the towers are going to be required. Voda's misbehaving by making slow to none payments to them. But I think that has to get resolved sooner rather than later. But that's definitely a stock worth working at. It's come back simply because of the fact that, Voda's sort of not paying its bills properly. But, Airtel is, and, so I think that will also resolve. Again, it will be nice to get some resolution on Vodafone, and also some resolution of what's going on in BSNL, MTNL. So I think that the telecom sector definitely is going to be consolidated, and the big hand of Jio is definitely involved in it. They may end up merging into one or two of these, but they're both one or either into the PSU one or into Vodafone, and then we'll be left with three players. But I think the telecom sector is definitely there, as ARPU seem to be going up a little bit, and as they go up more and more, it's going to be good for all parties concerned. And of course, Jio is going to be the biggest winner because they've got the most customers, and they've got this new product that the 999 phone, which is going to give you, super speed and allow the Janta to get into the space, which has always been Reliance's business model. Surabhi?
All right. Yeah. Mr. Advani, final question then before we let you go. You've told us in the past you don't mind missing out on that consensus that everyone wants to invest in banks. You said you'll rather stay away from the banking names. But I wanted to particularly ask you about HDFC. They've come together now. The fear in the near term is, can they grow on such a large base? And the second factor is NIMs will peter out a little bit in the near term. But how would you view the stock from here on? It's got a great track record over a longer duration, but in the last 3 years, it's been a relative underperformer. So your view on HDFC Bank from here on?
Well, business-wise, obviously it can't grow at, whatever, 170 billion or whatever it's going to be worth together as a combined. Obviously, the rate of growth will be slower than it has been in the past. But the reality is that together, they're going to be more than 10% of the index. And that is obviously going to have some effect on on what happens in the near term. I mean, the whole merger is going to take place between the 13th and the 15th and the 17th. So I think during that time, after that, we'll see probably some pressure on HDFC Bank for a bit, because some institutions will be having more than 10% of their holdings and will want to cut back, and then others will have to increase because of the ratios. So there'll be a bit of a tussle there. But it is the first choice of funds when they come to India. They look at the banking sector, and obviously the HDFC twins, which is now HDFC Bank, is the first port of call. So you've got that. You've got money chasing as an entry point. So I'm comfortable with HDFC Bank. I actually own them. and I've had them for a long time. I have sold some on the way. Again, I'm crying about that, but that's life in the fast lane.
Okay, all right, Pashupati, always great having you in for the conversations. Thank you so much for joining in. We're looking forward to the next one already. You have a good rest of the day. We'll take a quick break on that note. On the other side, as always, we get you check on dealing rooms in our segment D Street Chatter. Let's find out what Nimesh is picking up from the street today. And of course, along with that, trading calls for the last half hour. Welcome back. Less than 30 minutes to go before we wrap up today's trade, and it's going to be another strong session for our markets, 8th one in a row now, and the Nifty is currently up close to about 90 points. It's time now for our segment D Street Chatter. Nimesh is here to get us an insight into the dealing room. Nimesh, for the last 1 hour, we've only been using and talking about how the markets are partying. Tell us what's happening on the dealing room.
Again, as you rightly pointed out, record highs for the market for the 8th day now. And again, the good part is it's backed by FI buying. So for the last many days, the cash buying is quite strong. And that seems to be the trend today as well. In fact, I understand for the second day running, there's going to be a market at close basket buying at a leading FI desk. So that explains the move in the large cap names. Again, the sector which stands out is the PSU basket. The entire PSU basket has been well bid for the last many days. Now the OMCs have joined the party, and even there has been a lot of buying traction. So that space continues to do well. The mid-cap index is up 1%. After recent underperformance, some bit of traction seems to be back. And within that, the sector that stands out today is real estate. The entire real estate space is buzzing in trade on back of good volume. So again, every now and then you see one or two sectors within the mid-caps do outperform. And today seems to be the day for real estate. But net, the momentum continues and backed by large FI buying. So the numbers will be quite strong is what I understand, again, in today's trade.
Okay, all right. Nimesh, what about individual stocks though? What are you picking up today?
In terms of individual names, the first stock is HPCL. We've been reporting about how the brokerages have turned quite bullish on the stock, but the volumes are quite active in the HNI desk. In fact, some large HNI investors, I understand, are active buyers in HPCL. So that's the reason why a big move in that stock. So that's the first one. The second stock is Aurobindo Pharma at fresh highs today, and even at these levels, there is buying interest from larger FIs. So the momentum in pharma continues, and within that, Aurobindo has been the rank outperformer in the last many days, and so is the case today. The third stock is Delivery. For the last many days, the stock has been consolidating in a very narrow range. I understand there are some block bids been done at some leading FI desk. A clean out trade is expected in Delivery very soon, so that's something to track there. And the last stock is ICICI Bank. Within financials, this is one stock where I understand there's going to be a small market at close basket buying or a buying flow at a leading FI desk. So maybe we'll see a bit of surge in the last half an hour of trade in ICICI Bank.
Okay, thank you very much for that. Mitesh, the advice everyone's giving us is buy the dips, but the Nifty is not giving us a dips. The Nifty is only scaling new levels. What would you do now at the index level, and any BTST calls on stocks?
Actually, we were also slightly skeptical and taken part profits off wanting to buy back. And you're still holding on to part positions, and the market is making new highs. Now, I think the idea is very clearly enjoy the ride as long as it's going on. And now, I've suggested trading the stop loss about 19,350, 340, and keep a stop just 5-10 points below that. And I think as long as that doesn't get taken out, good chances that 19,650, 700 is the next target area. So stay long. On the stock side, I have a BTST on Tata Power. Here, I'm recommending a BTST with a stop at 226 for targets of 236. And Reliance as well is a BTST with a stop at about 26.20 or just below it in a target of 26.75.
Okay, thank you very much for that. Is it going to be a BTST call or just buy and hold, at least for the next few days, and ride the momentum? But now Surbhi is standing at the big wall to highlight the data which has been released by AMFI on the market cap categorization for stocks, which will be valid for the second half of the calendar year. Surbhi, take it away.
All right, folks. So let's look at this. Mutual fund body AMFI has released the market cap categorization for stocks which will be valid for the second half of the current calendar year, that's 2023. This is a biannual exercise, and it has a bearing on how actively managed mutual funds meet their stock selection mandate when it comes to market capitalization. What's interesting in the latest review is that the share of large caps in the total market capitalization has actually gone down. Not too much, but slightly. It's gone down from 69.4 in the previous version to just about 68.3 at the end of June. This is, of course, courtesy the sizzling rally that we've seen in the mid-cap space. And throughout the months, April, May and June, we saw that rally in mid-caps and small caps. So their share in overall market cap has gone up. Now, the other interesting fact, Mankind Pharma, the bumper listing of 2023, has actually directly leapfrogged into the large cap category. That stock has seen a gain of almost 24% since listing. Let's come to the movers and shakers themselves now. The stocks that have moved from the mid-cap category to the large cap category are on your screen. Let's take a look. JSPL, PNB, IDBI Bank, Canara Bank, TVS Motors with a huge auto rally, Tube Investments, and as I said, Mankind Pharma, direct entry into the large cap space. Now, the reason we have coded these in green is that in general, as stocks move up the market capitalization ladder, they become more discoverable and can end up attracting more local as well as global flows. Now, let's look at the ones that have actually slipped from large cap into the smaller category, the mid cap section. Many of the names in this list actually reflect the market's subdued sentiment towards these companies. So let's take a look at them. Nykaa, JSW Energy, Tata Elxsi, Indus Towers, Page Industries. This was a big disappointment. Remember, the results for the previous quarter were a big disappointment, lots of selling. Macrotech is interesting, though the stock has started rallying off late. InfoEdge is the other one. So these are the names that have moved from large caps to mid caps. Now let's take a look at some of the small caps which have become mid caps. Again, this would be green. Interesting names coming up over here, and that includes the likes of RVNL and Bharat Dynamics, which have been really the poster boys of the monster railway as well as defense stock rallies that we have seen. The other names, they include the likes of Punjab and Sindh Bank, Carborundum, Bank of Maharashtra, FACT, among the others. Now let's take a look at stocks that have actually slipped. Again, now we're talking about mid caps, which have come down to the small cap category. These include the likes of Piramal Pharma, Tata Teleservices, Nippon Life AMC. AMC stocks were hit hard when the whole TER issue was playing up. Clean Science, Blue Dart, Gillette India. Dr. Lal Path Lab, we know this whole talk of a lot of competition in the diagnostic space. So all of these falling to the small cap category. New listings, by the way, this year have been very, very interesting. And a lot of these new listings have debuted in the small cap segment. These also include some of the very high profile listings in the EMS, or the electronics manufacturing services space, the likes of Avalon Tech as well as EQ Lighting. Remember, EQ was the one that debuted with a 45% gain on listing day. Now, just remember that what you're seeing here, this is a categorization that doesn't impact any of the passive funds. The impact is on active funds. It doesn't necessarily mean that there are more flows coming into the stocks that have moved from mid cap to large cap or from small cap to mid cap. That's because the discretion at the end of the day lies in the hands of the fund manager, whether he or she wants to increase weights or decrease weights. So even if, let's say, a mid cap does become a large cap, if the fund manager feels the stock needs to move out or they need to sell down a little bit, that will happen. So there's no direct one-to-one correlation in terms of more money coming in these stocks, but they are, these rankings and this classification is a very interesting reflection of the overall market sentiment.
Okay, all right. Thanks a lot for that, Surbhi. Well, just a quick word on the markets. When we started off the show, we were telling you that if we can hold above that 19,480, 19,485, we could easily do another 40 points or thereabouts. And it appears the high of the day today is closer to around 19,515. Now you're seeing some bit of a come off from there, but it's going to be an exciting last 15 minutes because it seems the bears are stuck on the wrong side today, actually. So just keep an eye out on the screen. And the Nifty Bank is up now 230 points or thereabouts. Our market expert Amrish Balika joins us on the show. Hi, Amrish. Well, it's a party out there, right? Plenty of options to go ahead and buy. Before we talk about other stocks, tell us, you normally give us one pick. I believe this time around you're going with the swiping theme, the only core listed player from the credit card space. Go ahead.
Good afternoon, Nigel. Yeah, my pick today is SBI Cards. With a strong parentage like SBI, SBI Cards is the second largest credit card issuer in India with about 18% market share. They enjoy that vast distribution and customer network of SBI. And in Q4, we saw 27% rise Y&Y in the number of cards issued. And currently, the total number of cards issued is about 1.68 crores. Receivables also increased about 30% Y&Y. And if you look at the PAT in Q4, they delivered extremely strong numbers, 600 crores approximately PAT. Asset quality also continues to be decent with the net NPAs at about 0.87%. And the management expects the e-commerce transactions to increase by about 25 to 30% CAGR over the next 5 years. And if you look at the digital payments, they are expected to be about 65% of all the payments by 2026. So this means both business and margins should improve for SBI Cards as such. And looking at FY25, my expected EPS is about 36. So the target price is 1080, which is at 30x PE.
Amrish, yesterday Maruti scaled that summit of 10,000. I don't know if this is a stock that you had once recommended on the channel. What was the target price that you had given us then?
In fact, the target price was about 10,400, but then we are suggesting people to now start booking profits, not just in Maruti, but across the markets, because I feel that the markets are getting a bit frothy, especially the mid cap and the small cap side, and clearly it's the liquidity which is driving the markets.
So which are the stocks in your portfolio where you've recommended booking profits? Because in the past, you've spoken about some banking names. I remember Dabur, KEC. These are all stocks that you have liked. Can you tell us where is it that you're uncomfortable? Which stocks?
No, it is. It's in fact across, and especially in the defense stocks. We feel that the run, at least for the time being, is done. Although if you're talking of the next 4-5 years, I think there is still much more of upside. But then if the markets correct now, which is what we are expecting the markets to correct, the higher it goes, the fall will be more. So I think we'll get a decent opportunity to buy back these stocks at low levels. So again, I'm not suggesting that one should exit completely, but at least take off 25 to 40% of the portfolio and get into cash to a certain level. Because I think the biggest issue right now would be the Q1 numbers, because Q4 was excellent. And based on that, the expectation for Q1 also would be high. Possibly there, that's where I think we can see some disappointment going ahead. So I think it's better to take some profits off.
Okay, take some money off the table, have a good time. That's the recommendation that's coming from Amrish. Amrish, we want to discuss a lot more stocks with you, but for the time being, we'll slip in a short break. Before we do that, Axis Bank, that's your stock of the last 10 to 15 minutes. That one's moved to the high point of the day. And Wipro as well, both of them spiking up as we speak. So both the Nifty Bank as well as the Nifty IT index, both of them big constituents of the index, both of them have done a bit of an up move in the last few minutes because their individual stocks have moved higher. And that's what's helped the Nifty as well move higher as we speak. IT index from being down more than 0.5%, it's almost moving into the green. Well, as we take that mandatory break, let's get you some market opinion. Earlier today, we spoke to Sridhar Shivaram, Investment Director at Inam Holdings, to know his views on the EV motorcycles as well as India's growth in the manufacturing sector. Let's listen in to what he had to tell us.
So the early EVs will come, or we are already seeing, some of these moped type two-wheelers floating around in the suburbs. They're disrupting the 100cc more than the higher end. That goes for almost everything in the, I would say, to a large extent in the auto space, that the higher end seems to be doing well and the lower end is struggling. There is every data point that we get, companies that we speak, there is slowdown in consumption. But I think that's a space worth watching, which is the entire manufacturing space. I think India's coming of age as far as manufacturing. We've been hearing this thing that, India's potential of manufacturing. I think finally I'm seeing, on the ground, things really shaping up.
Welcome back. Here with us on Closing Bell, and we're in conversation with Amrish Baliga. Amrish, hi. I just wanted to get your sense on the tire stocks. I'm not sure if this is just a rub-off effect because, the auto space, OEMs have been sizzling with new launches. Anyway, stocks have done really well, or if there's anything more to it. But look at CEAT, 20% up, JK Tires, 7% up. Are you buying anything of fresh? Whether autos, auto ancillaries, or tires for that matter?
Not at these levels. I think clearly the story out here is input costs coming down, possibly margin increasing. But then that doesn't justify this. The way these stocks have moved up. Like I said, I think there's a lot of froth building up. and liquidity chasing these stocks. And because of the momentum, there are more people getting into it. So I think this could be a trap, at least in the short term. I'm just not talking of the tire stocks, but overall in the markets and especially in the small cap and mid caps. So that's the reason I'm suggesting that one should be booking out to a certain extent. It doesn't really make sense buying afresh at this point of time, unless, these are stocks which haven't really moved too well, but fundamentally good, like the one which I just recommended, SBI cards, since, that's also corrected in the recent past. So here the downside is limited. So, from that point of view, I'm recommending, because again, the target price I've given is over the next 6 to 8 months.
By the way, BSE, Bombay Stock Exchange, is now moving up quite smartly. It's up 3.5%. So reacting to that buyback news, it's a tender buyback, and the buyback price is, I think, 816, 817. So a pretty good premium to where the stock currently is. And plus, bear in mind, the stock has already rallied 10% till today, and now it's added on another 3.5%. So that's one of the big movers for the day. Ambarish, so you're comfortable holding on to State Bank SBI cards. Are there any other stocks where you wouldn't recommend profit booking if someone holds?
Say something like a Samadhana Motherson, where again we had some good news after a long time yesterday. I think that's one stock which can possibly go to levels of about 120, and then we have a second target at about 145. Then again, like auto ancillaries, I'm still bullish on Sona BLW, where I have a target of 620 to 680. Delivery is the other one where I've been recommending buying. That's moved, but not really well as with the markets. But there I still have a target of about 625. So these are the sort of stocks where I've been suggesting to just buy and hold. Whereas most across, for example, something like a Titan Industries, that's reached my target. I've booked out. Then, in fact, we have been suggesting Tata Power, where again, I think one can book partial profits, but I still have a target of 280, 300.
All right. On the large cap side, today, Amrish, we have Mahindra and Mahindra that's moving very, very well. The tractor is speeding, actually. What's your view on that stock? I think that they're gaining market share as well. And maybe valuation-wise, still not very, very expensive. Your view?
Exactly. I think that's one of the few stocks which I'll possibly hold. But at these levels, I'll not really buy fresh. Because, I would prefer to stay on cash to a certain extent. In fact, we were like fully invested towards end of March, early April. But at this point of time, I've been suggesting my subscribers and my clients to actually remain in cash to the extent of about 20%, possibly 25% also.
Ambarish, this is the most cautious we've heard you sound, recommending moving into cash and holding on to cash positions of what, 20%? 20% plus?
Yeah, it's about 25% is what I've been suggesting, because even if you look back about 3 or 4 weeks, I was still telling people to just hold on, because as long as the markets were not really going beyond that 18,800, 18,700 levels, I was quite comfortable. Looking at a small correction to levels of about 18,200 to 18,400. But now at these levels, and possibly in case it goes higher, I think the correction would be much more steeper.
Okay, all right, Ambarish, thank you very much. That's advice well taken. We'll keep that in mind. Thank you for joining in, and we look forward to our conversation again soon. By the way, folks, I was just looking at the FPI numbers. Nigel made the point about the money flow. I thought, okay, let's just quickly recap the numbers. So far in the month of July, and it's only been 4 trading sessions, right? Because July started from Monday. We've seen a net inflow of almost 17,000 crores. And this contrasts with an total inflow of 47,000 crores in June. 4 days, and we've seen almost 30 to 35% of the inflow that we got in all of June. When you have that kind of liquidity being thrown at you, you don't argue against money. Don't bet against cash. Basically, that's what it is, I guess.
Indeed, that's the hot money that's coming in there, Surbhi. But I think it's that, it's time to, close the markets now. I think of just a few minutes to go. So let's run you through the top movers today. You had the Nifty that goes home with a gain of close to around 100 points. It was threatening to get past that 19,500 odd mark, but we couldn't sustain at higher levels. The high for the day was 19,515. What did well? Mahindra and Mahindra, we were telling you about that. Tractor sales looking good. They're gaining market share as well. Valuation-wise, maybe not too expensive as we speak. So That's at least what the street believes. So the stock was up close to around 5%. Apollo Hospitals was up close to around 4%. You had Power Grid that was up 3.5%. And Tata Motors as well, up 2%. But the reason that the Nifty moves up is because of the heavyweight stocks that move up. And Reliance Industries, that accounted for a good bit today because that was up 2% or thereabouts. On the flip side, Eicher Motors, they continue to feel the heat because of new entrants in the market where they have a bulk of the market share, down close to around 2.5%. And HDFC Life as well did come in for some profit taking, down 2%. But broader markets, what else?
Well, in the broader markets, you had some big moves. I'm starting with a very small one, RPP Infra, but 12.5% higher. And this is after the company bagged an order. DCB Bank was flying in trade. KEC International winning orders. The company is comfortable with the guidance they've laid out. Margins of 7% this year, stock up 3.5%. Smart metering order pushes up Tata Power in trade today. You had Dixon rebounding after the sell-off yesterday. On the losing side, Marico was under pressure after the update that they gave and indicated that revenues could be a bit subdued. Godrej Consumer also on the way down, a bit subdued. RBL Bank, HDFC Life, Shriram Finance, some of these, financial stocks came in for profit taking.
That is right, but profit taking is, we saw that only in a few stocks here and there. Otherwise, it was the high flyers, literally all the way, big movers and shakers. Just throw in some more names. RPP Infra, because of that order win, 13% up on that stock. I mean, go beyond news as well and look at the way that the stocks have moved. Hindustan Zinc, 8% up. Torrent Power, 5.5% higher. CEAT, we've discussed, 18-19%. CCL Products, 5%. Electra Greentech, 6%. You know what? I'm just going to stop here because the list of gainers in the mid-cap and the small-cap market, it is breathtaking to say the least. The final close has come in. The bell has gone, 19,485. So maybe on an adjusted basis, maybe not quite at the 19,500 mark, but practically there in a matter of just about 5 to 6 trading sessions. And of course, a breathtaking mid-cap rally as well. It's been a very, very strong Thursday, defying all odds, defying weak global markets. Let's see if Friday bulls can continue to hold on the action. But before we go anywhere, of course, there's our Thursday special big deal coming up. So make sure that you come right back after this break to catch that special.